Yes Bank has declared to issue follow-on public offer, also known as FPOs in short, on 15th, 16th and 17th of July, by doing which the financial organization has set a goal to raise an amount of Rs 15,000 crores, and it is the highest FPO issuing declaration by any organization in India till date. Now let us understand the concept of FPOs in brief. Whenever any organization declares to offer its shares for the first time to the investors, then the process is known as Initial Public Offer, or in short IPOs, and the company's shares get listed in the stock exchange. And if the same company declares to issue shares again after getting listed in the exchange already, then that process of offering shares to the investors is known as FPO, or follow-on public offer. In this FPO, Yes Bank has set the price at a rate of Rs 12 to Rs 13 per share for the investors, where the current price of the existing shares of the company is available at a rate of Rs 21. So we can observe that the offered shares in the FPO are available at a discounted rate of around 40 to 45%. An investor can go for a bid of minimum of 1000 shares, which concludes that he or she should have an amount of Rs 12 to 13,000 for investing in the current offer scenario. While this offer has raised a lot of eyebrows towards Yes Bank in the market, in terms of looking for the reason to offer shares at such a discounted rate, to which the analysts have a clear and simple answer that the organization is in urgent need of money. As per the reports published in March 2020, the NPA, or the non-performing assets of Yes Bank, stood at around 5%, which is considered to be quite high in the banking sector. The needed investors for generating funds, because a continuous increase in losses started to result in reducing the cash reserves of the bank, and this scenario created an emergency where the Reserve Bank of India had to interrupt in between. In the month of March, RBI imposed a moratorium for rescuing Yes Bank, where they stated that the depositors of Yes Bank cannot withdraw more than the amount of Rs 50,000 from their accounts in a month, and this resulted in creating a negative brand image of Yes Bank. RBI removed their restriction of putting withdrawal limit for the depositors and requested State Bank of India and LIC to buy stakes in Yes Bank. Banks like ICICI, Axis, HDFC, Kotak Mahindra, Bandhan Bank invested an accumulated amount of around 10,000 crores to buy their stakes, and this somehow saved Yes Bank, but here SBI stood at the top by investing an amount of 6,050 crore rupees, which made them hold a majority stake of 48.1%. But all these funds were not sufficient enough for Yes Bank for recovering entirely from all its losses, and that is the reason why the bank took the decision of issuing FPOs. However, SBI still invested an amount of Rs 1,760 crores in this FPO, while the shares were also allocated to the anchor investor Tilden Park, who invested an amount of 2,250 crores to lead the anchor investment. With the outbreak of coronavirus pandemic, situations for Yes Bank have got even tougher, as their deposits are going down vigorously due to a negative brand image as a consequence of the withdrawal limit restriction put by the RBI. As per the reports of March 2019, the bank had deposits of around 2,27,610 crores, but currently they are at an approximate amount of Rs 1 lakh crore. Yes Bank doesn't have any competitive advantage in comparison to other banks in the business, because the image of the bank matters a lot from the viewpoint of the consumers, and people are bound to think about the safety of their investments before depositing their money in any bank. The current CASA ratio of the bank, which is stated to be the ratio of current account is to savings account, is around 26%, and it means that out of all the deposits, the bank has a fund of 26% generated through the current and savings accounts only. With the formation of a new Board of Administration in March 2020 by the RBI, the functions and operations have witnessed changes in the work culture of the bank. Mr. Prashant Kumar is the present CEO of Yes Bank, who is having vast experience in this sector, and it will be interesting to see how the bank performs in the coming days under his supervision. Now, considering the decision of holding shares in the current FPO, an investor should always keep in mind about the conditions of the bank, such as its NPA, decreasing deposits, incurring losses, and even the current COVID-19 pandemic. However, keeping the per share price of the FPO low is a strategical move by the management of Yes Bank, as they knew that the FPO wouldn't get a good response from the investors if the rates are kept high. If the video was interesting, informative, and useful for you, then do subscribe to our YouTube channel and press the bell icon to receive notifications every time we upload videos in future. Please like the video and share it with your near and dear ones, and please comment in the comment box below with your suggestions and requests. Please follow our page Fun Tax Guru on Facebook, Twitter, Instagram, and on LinkedIn.